All right, guys, this is Jamario Walker. I'll be briefly going over how to utilize or how I utilize the 20 period moving average, the 200 period moving average, the MACD, and the stock's price action to find great trading opportunities on a daily basis. So, we're looking at a 2-minute chart of AMD. This is today's action. It's ongoing. It's about 12:20 p.m. right now. The start of the day was here. We started with 4 red bars. Um, the last three became bottoming tail bars, meaning that the buyers came in and kept it off the lows. The buyers are seem to be camping out in the 76.40 to 76.30 range. They weren't letting it get below 76.34. And when I saw that move, I initially thought this was going to be a bearish day because AMD was down. Also XSD, I follow that, which is the SPY Semiconductor Index. I follow SMH. It was down also, or teetering between slightly up and slightly down. So just a lot of indecision in the market early this morning. But these bottoming tail bars told me that the prevailing short-term trend is going to be bullish. That's what it told me, and I was just waiting for a red inside bar to show up. I mean, a green inside bar to show up, so that I could take action on it. And after this red inside bar, the green inside bar did show up. At that point, I went ahead and I went in and bought. I want to say the 73 calls. Bought 3 of those on AMD. Even though one of the rules in trading is to never, never, never go against the 20 period moving average. We've got a declining 20 here, and I still put on this trade. I preach don't go against it. And 90 to 95% of the time, you don't want to go against it, unless you've got price action giving you an opportunity. And I've got MACD showing me that the selling was over and that the bulls were about to take over. So for beginning traders, I don't recommend you go against the 20. For a beginning trader, you should have just waited, after you saw this false breakout here. After seeing that false breakout, that was an opportunity to go short because the trend, the 20 period moving average, was about to start trending down. As you can see, it started trending down here. So for a beginning trader, that's what you want to look for. Those are, better opportunities to jump onto. Those are longer. See, this is a longer trend you could have profited off of. But for me, I do a little scalping and quick, day trades here and there. This particular day trade here was one that I did this morning. I went in here, 3 contracts. I sold 2 up the top here. When I saw that it failed to take out this high of the day, the opening high of the day. After we failed to make that breakout, I knew I had to get out of the trade. I'd already made my profit. I sold 2 contracts here. The last one wouldn't fill, so I had to stay in for the retracement period. And pretty much after all moves up or down, there will be a period of retracement, and you want to look for in a positive trend. If there's a positive bull trend, it would have been less than a 50% retracement. 50% retracement is about here, and we broke out of that. So once I saw that, the trade is over in the short term and you get out. But like I said before, for you shorter term guys who just started trading, you want to wait till you see something line up with your 20 period moving average. If you jumped on that early in the morning, you probably would have got stopped out from this upward move here. So, what I try to do is wait for the first 5 to 10 minutes of trading to go through to see if there's any strong trends or counter trends taking over, just to get a pulse for the market and see who's winning, basically. The bulls or the bears. So 2, 4, 6, 8, 10. That 10 minutes would have showed me that the bulls were about to take over, even if it's just for a short time frame, short period. You got the bottoming tail bars. You got the bounce off the 200. Strong stocks in an uptrend will bounce off the 200. We bounced off here. We bounced off here. Bounced here. Bounced here. Couldn't hold it here, and we broke through. So it's a resistance level. It was support until it became resistance. Support once broken becomes resistance level. This was our main resistance for today, but we've broken through the 20 period moving average. So the 20 is now the new, the 200 period moving average. So the 200 is now the new resistance level, as you can see here. I utilize the MACD also. It helps me to really gauge the selling and buying pressure. Selling pressure is denoted with the red. As you can see, this the first couple of minutes dominated by the sellers. Green is when your buyers start to come in, and you can see that reflected in the MACD and also the movement of the stock. We've got red here a little bit more, so we've got selling pressure coming back in, pulling us back down. We're still underwater for this entire period here. That's just what I call, when a stock is under the MACD, under the MACD line. This is an underwater state for me. This is above water. Usually when you're below water, you're declining. Usually when you're above water, you're rising. As you can see, this red reflect in the stock's price movement. We've got our green here. Buyers are starting to take over a little bit, trying to get in there, get the stock at a low price and to keep it off the 200, and they did. They kept it off the 200. And now we've got sellers coming back in for the long ride here. This is a very big bearish move. That's a lot of red, and it was enough to get that 20 to bend down and break below the 200. That break under the 200 is a lot of guys look for that as a buying or selling opportunity, and you can't, you can be profitable doing that. Once you see this break, the 20 breaking below the 200, it goes short. It's a lot better if you take that, that signal with this false breakout signal or this false breakout signal. You want to have more than one of the signal in your favor before you put on a trade. Just one may not be enough. Yeah, you want to have more than one of your criteria in your favor before you put on a trade, if possible. The more, the merrier. I don't use a lot of indicators. I only use the 20, the 200, and the MACD. I used to use the volume. It's kind of reflected in the MACD and in the price movement, so I don't really use it a whole lot now. But a lot of guys swear by the volume. Just use what you understand and what works best for you. So yeah, man, that's just a quick rundown of, it's a brief showing of how you can utilize the 20 period moving average, the 200, and the MACD to find trading opportunities.